Thank you for joining us at XM.com. At this preview video, we'll be looking at the much anticipated European Central Bank meeting coming up on Thursday, and of course, the reaction in the euro. I'm Christina Marujos. With me today is Senior Investment Analyst Marios Hadjikyriacos. Marios, before we look at the event, the central bank event, let's talk about the euro a little bit. It has been one of the best performing currencies so far this year. What's behind this rally?
Hello, Christina. So here's how I would characterize the euro's rally. We went from extreme pessimism about the euro area last year to extreme optimism right now. So last year it was about the energy crisis, about how harsh the winter was going to be in Europe. There was the prospect of a recession on the table, the risk of a recession. Now fast forward a few months, Europe survived the winter without a recession. Energy prices have fallen very sharply, and most importantly, the European Central Bank has come a long way in raising interest rates. If you look back at the last decade, one of the euro's biggest problems, one of the euro's main disadvantages was the European Central Bank having negative interest rates. That made the Eurozone unattractive as an investment destination. Well, that has changed dramatically. The ECB currently has interest rates at 3%, and market pricing expects them to go as high as 3.6% in this cycle. So that has helped make the euro more attractive from a relative interest rate perspective. And it's not just interest rates. Like you just mentioned, the euro area economy is enjoying a burst of momentum. We've seen business surveys lately telling us that the economy is reaccelerating. Inflation continues to rage with support from consumer demand, and the strength in the labor market has helped to fuel some wage growth. So the stars have aligned in a sense, and we seem to be looking at an economy that is going through a pretty strong patch.
That's absolutely right, Marios. Now let's turn to the ECB event itself. A rate hike had been well telegraphed in advance, but traders are still speculating about its size. But the latest inflation report didn't bring much clarity to the market. So what should we anticipate from tomorrow's ECB decision, and how could the euro react?
Yeah, so here's the conundrum about this meeting. The investors are certain there's going to be a rate increase, but they're still debating the size. Now, if you look at market pricing, traders assign an 80% probability for a smaller 25 basis point rate increase and a 20% probability for a bigger 50 basis points move. Now, if you just look at the economic data, you can make a strong argument for the larger move, right? That's why I think the market is still keeping some probability of that happening, because the economy can probably withstand it and inflation is far too high. Now, on the other hand, the ECB has already raised interest rates very aggressively, and it's almost certain that they're concerned about the lagged impact of their previous moves. So when you raise interest rates, it takes some time before the full effect of that move is felt in the economy. And the ECB has done a lot on interest rates in a short period of time. So there's this concern about overdoing it, about maybe going too far and inflicting unnecessary damage on the economy. So I think it's going to be a standoff between the hawks and the doves. And as always with the ECB, it's going to be a compromise between them. And the most likely compromise is to raise interest rates by 25 basis points, the smaller move like the market is expecting, but accompany that with pretty hawkish language, hinting at more rate increases to come, our job is not done, and something along those lines. Now, if that's what we get, Christina, I think that just by the size of the rate increase itself, considering how the markets are positioned, that argues for a negative reaction in the euro at the time of the decision. However, I also don't think it's a huge deal in the broader picture. The euro is in an uptrend, and for us to get a signal that the uptrend has resumed, we would need to see a break above 1.11, the 1.11 region, which was the recent highs.
Marios, thanks so much. The European Central Bank meets on Thursday. Thank you for watching this preview video here at XM.com.